Today is February 19th, 2026. It's the afternoon after market close. This is a conspicuous day in a way because exactly 6 years ago, February 19th, 2020, the markets reached an all-time high. More specifically, the US markets by way of the S&P 500 index, which we seem to concern ourselves with the most. My name is Muhs, and this is the intro to my February 2026 e-newsletter, which you can subscribe to by going to muhs.ca/newsletter. Unless, of course, you already clicked on a link in an email from me, and that has sent you to this YouTube video, in which case you already are a subscriber. So today, except for the TSX, the markets did close down a bit. There are, of course, people whose job it is to speak about this every day, throughout the day on the financial noise networks. And there are people who tune into that who think that it is in some way relevant to their investment success. I'm going to look at things a little bit longer term though. On February 19th, 2020, the S&P 500 finished at an all-time high of 3386. This chart shows what the index did over the decade preceding. So you see a fairly good above average return of about 11.8% annualized as it marched up from a value of 1100 roughly to basically more than triple its value over those 10 years. And this does not even include dividends, which are relatively low on the S&P 500, but would have even amplified those returns a bit more. Now, without knowing what happened after this date, looking at the markets in February of 2020, you might see this as an above average return, so maybe the markets are a little bit overvalued. You also hear news of some mysterious virus spreading overseas, and maybe that gives you pause when it comes to deciding whether or not to invest in the markets at this time. If you had invested and you saw some great success over those 10 years, perhaps now is a time to take some money off the table. Certainly at that time, there were people telling you either way, invest your money into the markets or get out. Something scary is about to happen. Now is maybe a time to take some gains. Personally, I haven't watched any of those financial noise networks I mentioned in several decades, so I don't know what they talk about these days anymore, but probably stuff like that. So in the month that followed, well, we know what happened now in hindsight, but no reason to now rehash the distant past or what actually feels like a distant past now in 2026. After that high on February 19th, the markets crashed 34% to a low on March 23rd, about a month later, of 2237. It rebounded quite quickly though after that, followed by about 2 years of bear markets from the beginning of 2022 until beginning of 2024, when markets again reached new highs. And as we know too, there was a recession or a technical recession at that time. There were 2 back-to-back quarters of declining GDP in the US. It just wasn't actually declared, but there was a lot of noise in the media as well regarding inflation rates. And we saw interest rates at levels that we had not seen in several decades. With that, if you had $10,000 to invest on February 19th, 2020, and you had the absolute worst luck, and you invested that money right at that point in time, and then you simply ignored the markets from then on and just continued on with your regular day-to-day life, your investment in the S&P 500 doubled to roughly $20,000. And that would even be taken into account that perhaps you had some pretty high management fees on your investments and they ate up all of your dividends, because I'm not including dividends in these charts. That works out to a return annualized of about 12.5%. Getting back to those people on those financial noise networks that I mentioned earlier, I don't think any of them really want you to see this type of success, which is why I pay them no heed, and I recommend my clients as well tune them out, ignore them, cancel them off your cable package. 1, they don't care about you actually growing your wealth. And 2, they wouldn't want you to tune out and ignore the markets or ignore your account for this long period of time. They want you tuning in. They want your eyeballs glued to whatever they're talking about, and of course watching those commercials in between. And that, of course, is their business. The same goes, of course, for any online news sources talking about investing in the markets. And of course, those many uneducated influencers on YouTube or on other social media networks extolling the virtues of whatever their investment strategy happens to be, whether that's some shiny object like cryptocurrency or otherwise. Or maybe there are people that like to continuously put out content meant to scare you, to have you worried about what's going to happen, again, to tune in to see what happens next. Investing all of your money into just an S&P 500 index fund, of course, is not right for all people, but just an example. And here, an example of how we advisors add value. We help in keeping you from being distracted by whatever shiny object is attracting your eyeballs now, whether that, again, is something like cryptocurrency or AI investments or whatever stock is now the biggest in the S&P 500. We help you put into perspective whatever doom and gloom happens to be in the headlines today. How does this actually impact your investment strategy and your financial plan? Yes, the COVID crisis in 2020 was a very scary time. I was scared myself for my own health, for the health of my loved ones. I was worried as I saw my investment portfolio declining substantially. I was 100% invested in the markets at that time. Many of my clients were. My client portfolios in aggregate declined by millions of dollars over a fairly short period of time. Really quite disconcerting. At the end of the day, though, it paid off to focus on what really matters. What is the right mix of assets for you to reach your financial goals? In particular, what's the right mix of assets that you're willing to stick with even when things go awry? And I always say when, not if. For more than a decade now, I've been telling every new client, when you invest money with me, the markets can tumble immediately the next day. We might see multiple years of declines right off the bat. I make no promises that things will continue either the way they have been or that I have some sort of clairvoyance and can see what the markets are going to do in the future. If anyone is ever telling you they do, run, turn around, run. Nobody can predict what the markets are going to do. What we can simply do as advisors to investors is formulate a financial plan, find the right investment strategy that matches your personal risk tolerance, your capacity, and your time horizon. And when that day comes, when the markets take a tumble, when we go maybe multiple years in which you never see that all-time high again, we're here to help you put that into perspective of your plan. Hopefully you're in the right mix of investments that matches your time horizon. Having that financial plan, knowing that our investments match our time horizon, helps us get through those time periods. No, I don't want to have this video come off as seeming like I'm predicting doom and gloom. I certainly am not. I'm not predicting doom and gloom or that we will see another year like we saw last year in which global markets were up somewhere around 20%. But if you have any comments or questions, by all means, comment on this video on YouTube. I will read them. You can find my contact info at muhs.ca and subscribe to the newsletter to get more stuff like this. So long for now.